Yeah, all right, guys. Good morning. Good morning, everyone. Okay, just as we said in the last video that we'll be having a practical section, all right, where we will go into more details, okay, on market execution, okay, on how to execute your trade, okay. So this is the MetaTrader 4 app, all right. So this class is not to explore the futures in MetaTrader. All right, we have a video for that, and that should be the next video after this. Okay, our sole focus in this particular video is to explain different ways in which you can execute your trade. Okay, so look at the nav bar up there, above there at your right. Okay, you would see a plus sign inside an envelope, kind of. So you click on it, it will bring you here. So this is where you take your trades. Okay, so you can see market execution there, right? Good. So if you press sell or buy, you are buying or selling at the current market price. Okay, how do we know the current market price? This is your chart. Okay, here you can see this green line here. Now this green line is your current market price. Okay, I already took one sell on this demo account. Okay, let me just close it. I installed this demo to make this video because I know I'll be taking trades, so I wouldn't want to do that with my real accounts. All right, so this is it. So this green line is your current market price. So if you are selling, so you just press sell. If you're buying, you just press buy. All right, so let's sell. So what happened? The market got executed at the market price. Okay, you can see sell here. All right, that green dotted line, all right, is where the market got triggered from. All right, so that means we have sold at the current market price. All right, so that is instant execution or market execution, selling or buying at the current market price. All right, okay, so let's go back. You can see market execution. Tap there. When you tap there, you will see the other kind of ways to open a position in the market. All right, the other kind, we have buy limit, we have sell limit, we have buy stop, we have sell stop. All right, so let's begin from buy limit. Remember that, so like we said actually in the last video, okay, that we have limit orders and stop orders. Okay, so in limit orders there are two types of limit orders: buy limit and sell limit. Okay, but generally limit orders, okay, is an order that is placed in anticipation that market will change direction. Are we together? That is, if the market is selling, you are anticipating that the market, after it has sold to a certain point, it will turn and begin to buy. Okay, while if the market is buying means moving up. Okay, you're anticipating that the market will move to a certain point and reverse and begin to do what? Sell. That is what limit order is. Okay, so let's go to the chart. Let's go to the chart. Okay, so this is it. You can see that this market is selling, right? Let me compress this a little. All right, so you can see it is selling, right? Because the price is going down, it's falling. All right, so we can say, let me get this highlighter, this black, it's like a cursor or something. Yeah, so but it highlights the price for us and time and date for us too. So look at this dark part on your left, on your right. You can see 1934.26. So we might say, after you've done your analysis, you are hoping that as the market is falling, once it gets to this price, it will reverse and do what? And go up. Okay, good. That is buy limit. Instead of you buying at this current price, just so you know, this 1936.79 the green line, okay, you are saying no, it is too high for me to buy from there. Okay, this market, I am expecting it that it will fall and it will get to 1934.26, the black part that is highlighted. All right, yes, you are saying, oh, if market gets here, it is the price I want to buy from, right? So you're buying, but you're not buying at the current market price. You're using a pending order. Are we together? Good. Remember from the previous video that it is possible price may never get there. Are we together? Yes, but of course from the analysis you'll be sure. Like myself this morning, I've already done my analysis to take trades, and I've set where I'm expecting price to get to, and I hope price gets there. Right? Of course, my order will be triggered and my trade will be up. Okay, so this is the price we are waiting for, 1934.26, right? So it's a buy limit trade. So let's go back. So we'll click at buy limit. You can see market execution have now changed to buy limit. When it was at market execution, you did not see price 00 here. You did not, right? Good. Why? Because you're buying at the current market price in market execution, but in pending orders. And here we have buy limit. You have to put in the price you want to buy from. So we are buying at 1934.26. So we place the trade. Good. Now you can see the other one we sold. You can see it's running. Is in minus $3.87. All right. It's the price is fluctuating. But look at this other one that is under orders. This one is position. This one is orders. It has not been activated yet. Why is it not activated? It is not reading. This one is reading minus $3 and something cents, but this other one is dormant. Why? Because it is not yet live. Okay, go to the chart. When you go to the chart, you will see it here. You can see the one we sold before, that is live. You can see the second one. You can see buy limit. Okay, then 0.03, that's the lot size. Okay, we'll talk about lot size later on. All right, then you can see a dotted line. So once price gets to this our green dotted line, the last green dotted line, okay, the order we set for your buy limit will be activated. All right, remember buy limit is just like buying, but you're not buying at the current market price. Okay, good. Now sell limit is the same thing. It's just the opposite of buy limit. You are selling, but you're not selling at the current market price. So what happens in sell limit? Sell limit is that you're expecting that if market goes up to a certain level, it will begin to fall, right? You can say, oh, if market reach this 1942.67, it will begin to sell, right? It will start falling. So what do? You take your sell limit order, place it there and allow it. So once price gets there, it will be triggered. Gosh. My pending order, market did not get there, but it has started selling. It activated from another order block. Let me leave it. You don't jump into trades, right? Yes, you allow the trades to meet your requirements. You allow the market to play out what you're expecting it to do. Whoosh! It's really pulling down. I thought of taking this trade. Sorry, you're not seeing my chart, but it's all good. It's all good. So that is it for limit orders, right? You take the trades hoping that market will reverse, right? Yes, hoping that it will reverse. If it's a buy limit, you're hoping that market is selling. Once you get to a certain point, it will start buying. You're taking a sell limit, market is buying. Once you get to a certain point, it will sell. So that certain point is now where you will place your order. Right? Okay, so let us go to buy limits. Are we together? Sorry, buy stop. Right, I think that should be the next. We have done sell limit and buy limit. Right? Okay, so for stop orders, okay, which we have buy stop and sell stop, we are not expecting the market to get to a certain point and reverse, right? For instance, let me show you. Let's go to charts. Okay, this is chart. Now remember, this order we placed here, that markets will sell to that point and reverse and begin to buy. Okay, that is for a limit order. For a stop order is that once market gets to this particular point, it will continue selling, right? So it's not that when market gets here it will reverse and start buying. No, the market to continue selling. So a sell stop is that the market is sure of how it's going well. Are we together? But if only it could sell to this particular price you have chosen, that means you will be sure that it will continue to do what? Sell. So you're not selling at the current market price, but you're waiting for the market to sell further to your entry point, then it will trigger your order and you're anticipating it to continue to sell. Are we together? So that's what stop orders is. The same thing is for buy stops. All right. What I just explained is sell stop. Buy stop is that the market is rising, but you're not sure of how far it's going to go. But then you're saying if only the price will rise to this, if only the market could rise to this price, then I am sure that it will rise further, right? Now, not if only the market will rise to a particular price, I am sure it will reverse and begin to sell. No, this one is that you're sure to begin to rise further. Are we together? So that is what a buy stop and sell stop means. All right. So how do you put your stop loss and take profits? All right. Now you can see here you have a minus here. Now let me type space here that types 9. Let me type some here. That rule is for your take profit. All right. So what is a take profit? All right. It is the level in price a trader is willing to exit a particular trade in profit. All right. Is a level in price you're willing to exit a particular trade in profit. And the same thing for your stop loss. Your SL, which is your stop loss, and your TP, which is your take profit. The stop loss is the level in price a trader is willing to exit a trade in loss. Are we together? That's your stop loss. Okay. Yeah. So let's do an example. Okay, we will take a trade here. Right? Excuse me. I want to take a trade here. Right? Now, we're already on a sell here. Okay? So we are saying that this market is going to sell. All right? Now, this place will put our buy limit. Okay? Let me compress this a little. Okay? Yes, this is okay. Now, you can see that this market has a lot of places to cover selling downwards, right? A lot of inefficiencies and all of that. Now, you can say this market as it is selling, this is where I will put my take profit. Now, note this. If you're selling, your take profit should be below your entry point, right? And then your stop loss should be above your entry point. Are we together? Now, because if you're selling, you're expecting the market to drop. So the market will drop to a certain level where you expected it to, and it will close you in profit, right? So that means if you're on a sell and the market is buying, and that buying is above your entry point, you should be in a loss in that trade. Then if you are buying, okay, and the market is selling and it has sold beyond your entry point, you should be in a loss. So your stop loss is that if market sells in this my buy trade, beyond my entry point and it gets to so level, please close that trade in loss for me so you don't get to lose all your trading capital. Are we together? So part of a risk management measure is that you ensure you set stop loss for every of your trades. Are we together? Good. So that's what stop loss and take profit is. So now we are selling. Okay, so we want to put our stop loss at 1922.48, and then our take profit, these are take profit rather, and then our stop loss should be above the current market price. Let's say 1942.78. all right, so let's take the trade. We'll click here. Remember, we are selling, right? Good. So these are take profit. Our take profit is 1922.48, and then our stop loss is 1942.78. Sell. Good. So these are new sell position. You can see this red dotted line under here is showing TP. What is it showing? It's saying that once price gets here, market gets here to close our trading profit. And you can see above here, excuse me, you can see the other red line above here is our stop loss. So once price gets there to close the trading loss. All right, so if it's a buy trade, your stop loss will be below your entry point. All right, and then your take profit above, right? Then if it is a sell trade, your take profit would be below your entry point while your stop loss will be above.